Right now, 60% of global family offices, portfolios averaging $1.3 billion each, are actively restructuring their asset allocations for 2026. According to the latest UBS Global Wealth Survey, this capital flight is driven by two specific rising threats: intensifying geopolitical conflict and a mounting crisis around sovereign debt. The traditional anchors are losing their pull. Almost half of these institutional portfolios report they are overexposed to the US dollar, viewing that currency concentration as a primary risk factor for the next 5 years. This chart tracks planned real estate allocations, showing a sharp drop from 11% last year down to 8%. The immediate move is currency diversification. Portfolios are shifting reserves away from the dollar and into the euro and specifically the Swiss franc. To defend against instability, they are leaning into physical gold, utilizing it as a hard hedge against inflation and systemic shocks. But the primary offensive strategy is artificial intelligence. 65% of these massive portfolios already hold AI exposure, and they are actively looking for more. They aren't chasing volatile consumer-facing AI apps. They are targeting the heavy infrastructure, data centers, software, and the underlying systems that actually run these ecosystems. This creates a specific mandate for the coming year. Capital is searching for assets that pair foundational AI infrastructure with broad geographic diversification and the capacity to handle hundreds of millions of users. This is where the binary holding steps in. It is a piece of national-grade behavioral intelligence digital infrastructure that operates entirely within emerging markets. This map shows its reach. It doesn't ask users to download a new platform. Instead, it is already embedded directly inside over 500 million existing telecommunication, wallet, and banking applications across 13 distinct countries. Right now, that embedded network captures the interactions of 568 million monthly transacting users across 8 live active markets. And with 5 more regional partners scheduled to activate, that footprint is projected to reach 1.2 billion users by the end of 2026. Unlike a startup burning cash on customer acquisition, the binary holdings is the base layer. It is already there, capturing daily engagement within the world's fastest-growing economies. To understand how it converts that scale into a strategic asset, we need to look at this 5-layer tech stack. This architecture bridges the host apps on top with pure behavioral intelligence below. The foundation is L02, the binary network. It's a Layer 1 blockchain settling 1.84 billion monthly transactions, achieving finality in under 3 seconds. Sitting directly above that is L03, Binary OS. This is the runtime engine. It orchestrates user events and coordinates data routing natively, without ever interrupting the consumer's normal experience on their phone. The core of the system is L01, the BNI layer. Here, massive streams of raw behavioral data are filtered through a strict cryptographic process called K=50 anonymization. This means every individual data point is mixed with at least 49 others, stripping away personal identity while preserving the broader behavioral trends. Once that data is structured, the top layer, L04, allows the host applications to activate specific revenue streams, like gaming or digital loyalty programs, tailored directly to that localized intelligence. For the telecom and banking partners hosting this infrastructure, the financial return is precise: a verified 2.4% increase in average revenue per user and a 2.8% drop in customer churn. The binary holdings has built an automated pipeline that takes billions of fragmented, everyday interactions in emerging markets and refines them into legally compliant, structured AI data. This brings us back to the multi-trillion-dollar problem facing family offices today. Where can capital migrate to find growth while diversifying away from the dollar? Since these offices mandate exposure to AI infrastructure, the binary holdings operates as the national-grade behavioral intelligence layer for entire populations. Because the mandate also requires emerging market diversification, TBH provides a direct link to the digital engagement layer across 13 distinct economies. And with nearly half of these institutions now viewing digital assets as a strategic necessity, TBH delivers an institutional-scale Layer 1 settlement network that utilizes native stablecoins for gas to maintain stability. Crucially, this provides a direct path to capture these growth vectors without paying the high premiums currently attached to many Western software companies. For the family offices currently orchestrating this historic shift in asset allocation, the binary holdings aligns with the new requirements of institutional capital. It provides a technical path to capturing growth in emerging markets while maintaining the structural security that these portfolios now demand.